I think we're still so early in the Bitcoin story. I'm public on record saying I think Bitcoin hits 250 to a million in this cycle. So now I'm speaking the next like 10 to 18 months. We're debasing the currency. We have rates at zero. That's causing inflation. Inflation causes us to rise rates faster than we've ever risen them before. That causes bonds to fall. That causes banks to become insolvent, which causes the market, Wall Street, banks, like, where can we find some activity? Where can we find some life? Which causes all of a sudden, and a fear for future debasement, which causes Bitcoin ETF approval, which causes them to have the most successful financial product they've ever had.
Jack Mallers begins by emphasizing that we are still in the early stages of Bitcoin's story. Despite its significant growth and adoption, he believes Bitcoin has much more potential. Mallers is on record predicting that Bitcoin could hit a range of $250,000 to $1,000 in the next cycle, which he defines as the next 10 to 18 months. This prediction is grounded in his view of Bitcoin as the best hedge against fiat currency debasement. Mallers explains that if the problem is fiat debasement, the solution is Bitcoin. He describes Bitcoin as a put option on the existing financial system and a long volatility asset. Traditionally, people have turned to gold or real estate to hedge against currency debasement, but these assets have limitations. Gold, for instance, is a collection of chemicals with physical constraints, and real estate, while limited in quantity, can still be expanded vertically in urban areas.
I think we're still so early in the Bitcoin story. I'm public on record saying I think Bitcoin hits 250 to a million in this cycle. So now I'm speaking the next like 10 to 18 months. And that's not, what did you say, 70%? I mean, that's a lot of percent. So if your problem is fiat debasement, then it's best expressed through Bitcoin. So you're taking the opposite. It's a put option on the existing system. It's long vol, right? Like, I don't know, I'm just talking trader speak, but that's what you want. And traditionally you try and find that through something, right? Gold. Here's this collection of chemicals that like kind of gets me close. Real estate. In theory, they can't print any more land. Does that mean they can't print any more real estate? No, of course. I mean, I'm sitting here in fucking New York City. They could build pretty high buildings, but like, I don't know, I'm kind of close. Bitcoin is the only instrument in your portfolio that we humans created to solve this exact problem. Everyone has their own interpretation of the white paper, but I mean, come on, give me a break. Satoshi, right after 0809, created it and said, central bankers, I can't trust them. And so this is the best expression of the problem at hand. And so, and in more plain speak, what that means is that it goes up the most. So for those that, need to put two and two together, that means it's going to be the most performant. So why does Wall Street want it? I have been more performant than Ken Griffin for 10 years. That's why they want it. People aren't stupid, right? You either have to work 10 times as hard to outperform a Bitcoin holder, or you just own Bitcoin. I think it's the best expression of currency debasement. I think it's the best expression of the problem at hand, right? So it's a mirror. Bitcoin's a mirror. I look in the mirror, what do I see? Some ugly, fucked up shit. That's why. And so I think it's going to reflect the issues. And that's the reason Wall Street wants all these ETFs too, is Bitcoin is the only free market in the world. It's the only like pure human. It's volatile. It reacts to the world we actually live in. It makes moves. It makes noise. It makes stories. It makes headlines. And that's life. And that's why they want that. I mean, banks are making money on these ETFs. They're not making money owning bonds. And so I think for all of those reasons, it will directly reflect the world that we're living in today. And I think that world's very, very banged up. I think central banks have gone through progressively trying to price fix markets to keep everything together. And what market is up next? The all mother of all markets, the bond market, the sovereign debt market. And so how much money is that? We're looking at the dollar yen swap line that just opened. If the US government, if the Treasury is going to be giving unlimited dollars to Japan and China to protect their currencies, you're going to get 2-3 COVIDs in this cycle as far as stimulus and printing. People are too fixated on the cost of capital as far as rates. They need to be more fixated on the amount of capital, which is they're still printing dollars. It doesn't matter that rates are at 5.5%. It's still inflationary. And so for those reasons, I think, how am I supposed to predict the most fixed asset in the history of mankind against the biggest fucked up problem that central banks have ever had to try and solve? I mean, come on, 250 to a million. I feel super confident about that. I don't think that Bitcoin's price as a reflection of the upcoming debasement is dependent on how some asset manager plans on rebalancing, right? It's the, same as like, if asset managers rebalanced Lamborghinis, then like they'd actually be worth 50 grand instead of 200 grand. No, they're worth 200 grand because people are willing to pay 200 grand for them. So I think people will be willing to pay $250,000 for a Bitcoin based on the mess that I think, there's a massive hole and there's a loss that has to be realized. That loss is going to come through debasing the currency. Asset prices are going to go up. And what is the best asset and the most performant asset? What's the best money in human history? And so I think that has to be accurately priced. And it doesn't really matter what some guy on Wall Street thinks in regard to his own portfolio. It's his loss if he sells it. I think the more financial products, the better, because what we want is true price discovery. The problem, like the idea that derivatives can suffocate Bitcoin and manipulate the spot is demons that people feel from gold. Gold naturally centralizes, right? Like gold holders all don't have a cold card in their room with their physical gold on it. They can't take a physical instrument like gold and put it in their brain like they can with Bitcoin. And so, the physical Bitcoin on exchanges right now is at an all-time low, but the supply goes up every single day. And so that means that more Bitcoin is held with the individual. That's the logical conclusion. So the idea that Bitcoin would fall victim to concentration and manipulation through derivatives, I think is a fallacy. And it actually goes to Satoshi launching a bottoms-up movement. Satoshi did not go to Goldman Sachs and say, I would like to list this thing publicly and I'd like you guys to own 25% of it. He put it on a mailing list and he walked away. And for that reason, it'd be nearly impossible for someone to own a concentrated amount of this asset class, in my opinion. There's a reason the same thing that is in theory being manipulated by derivative markets and, the CME and all these big exchanges shorting gold without having physical. That's the same thing that was concentrated enough for the US government to create fiat. If gold was good enough, I wouldn't be born into the dollar system we are today. So, part of my childhood being fucked up and being debased in constant American war is the fact that gold wasn't sufficient enough to solve the world's monetary problems. So don't give me a history lesson on gold. This is the reason Satoshi built a better one. It's just, so I don't think that these are problems at all. And I think the fact that Larry Fink is a Bitcoiner and Jamie Dimon, whether he wants to admit it or not, is a Bitcoiner, according to his revenues and growth and activity and reports, that's a good thing for, everything's good for Bitcoin, right? That's what I think wholeheartedly. Every single thing is good for Bitcoin.
Central banks' efforts to control and fix markets, particularly through measures like price fixing and quantitative easing, have only exacerbated economic problems. Mallers discusses the bond market, especially sovereign debt, as the next major area of concern. He warns of the potential for massive stimulus and currency printing, akin to multiple COVID-era interventions, which will further debase fiat currencies. Central banks' efforts to control and fix markets, particularly through measures like price fixing and quantitative easing, have only exacerbated economic problems.
Banks right now are making a lot of money on whatever they're getting, 5.25%, 5.5% back, but they're not going to go lend real money to real businesses right now. So the actual denominated value of the bonds are getting absolutely obliterated, and that's putting their balance sheet underwater. They're functionally insolvent, so they aren't actually stimulating the economy. So right now, banks, there's like $3 trillion of banking reserves on the Fed's balance sheet, and they're just collecting. If I'm a bank executive, I'm not doing jack fuck all. I'm going to just sit on my hands, never lend any real money, and just collect payment. But this is unsustainable economic activity. And so to me, that doesn't count. Like the US government part loves Tether, hates Tether. They hate Tether because they don't love fully reserve systems that just take advantage of rates. Like they're willing to give you these rates and these accounting tricks so that you play the game. And so Dimon's playing the game, and like that business is screwed because you're also not getting the growth that the government is producing with the capital you're lending them. They're not paying you the full growth of the economy. The economy's growing 10% or whatever. They're paying you 5%. It's like, well, I'm going to go put my capital to where I can realize the growth that's actually happening in something like Bitcoin. Why would I lend you the money? You're giving me half. You should only be spending on things that you can afford through my taxes, and you're debasing the currency. So you want to debase the currency, tax the living shit out of me, and not pay me in full when I lend you money? Fuck off. And so therein lies the problem. Here comes this industry where like these guys, traders want volatility. Traders want life. There's natural entropy in the universe, and central banks try and control it and suffocate it. And here comes a totally independent market that has you feel alive being part of this industry. And so, yeah, that's why I think banks and Wall Street wants to be in the business of, so they're like Strike, they're in the business of financial services in the space. And then why would you want to own it? Is because it's the direct reflection of all the problems. It's taking the other side of the fact that governments have borrowed so much from our future with no way to pay it back. Owning Bitcoin to me is saying, I don't know how you guys are going to solve this one, but it's not going to be my time and energy. And that's a very popular vote. The fact that you can cast that from your phone by downloading an app like Strike. I mean, who wouldn't do that? I think it's so funny that, I mean, let's like walk through the game theory flywheel of we're rapidly debasing the currency. That's causing inflation. So we're going now 2020 COVID. We're debasing the currency. We have rates at zero. That's causing inflation. Inflation causes us to rise rates faster than we've ever risen them before. That causes bonds to fall. That causes banks to become insolvent, which causes the market, Wall Street, banks, like, where can we find some activity? Where can we find some life? Which causes all of a sudden, and a fear for future debasement, which causes Bitcoin ETF approval, which causes them to have the most successful financial product they've ever had, which causes them to go, you know what, Gensler, you're not in charge anymore. I'm in charge. How many of these pieces of shit do they want ETFs for? We're accepting all of them. So all of a sudden you go Diamond going from a Bitcoin skeptic to a cheerleader. And now you've got both political parties supporting Bitcoin. You've got Wall Street supporting Bitcoin. You've got Jamie Dimon's lip service bad boy Dimon. He's supporting Bitcoin. And that's the game theory of what I think is something that's just so pure human. It's a free market. It's honest. It's integral. And that is what, at the end of the day, you can try and fight natural human behavior all you want. We all land in the same place. We all land on hard money, integrity, ethics, morality, global love, freedom. Those are all things Bitcoin represents. So you can walk your little death spiral all the way. Come to daddy. Come to daddy. So I think it's just funny. I don't think it's good, bad. It's, for my business, it's a distraction. I don't give a shit.
Yeah.
But I think it's comical.
Mahlers criticizes the current state of the banking sector, highlighting how banks are sitting on massive reserves and collecting interest without stimulating the real economy. This unsustainable model, coupled with central banks' efforts to control the economy, underscores the need for an independent financial system. Bitcoin, as a decentralized and transparent asset, offers an alternative that aligns with natural economic principles. Mahlers outlines the game theory behind Bitcoin adoption, illustrating how economic pressures and the search for viable investment opportunities are driving more institutions and individuals towards Bitcoin. The cycle of currency debasement, rising interest rates, and bank insolvencies is pushing Wall Street to embrace Bitcoin as a hedge and a means of accessing market activity and growth. Please like and subscribe my channel.